Um, Other technical subsurface specialists, for example, petrophysicists or geologists, it depends on the project. There might be even some production technologists involved, and there might be some consultations with well engineers as well. Another compulsory player is a process engineer who is responsible for facilities and infrastructure evaluation. Economist who runs economics and estimates net present value of the project or the company, take into account all the tax and costs. There might be cost engineers involved as well. Usually cost engineers are responsible for drilling costs, for example, or for facilities infrastructure costs. So process engineers sometimes can be cost engineers as well. And there might be some investment bankers involved, especially in small companies. It's quite common to work close together with investment banker. That's what I had in my experience as an independent consultant. But in large companies, of course, there is more split between the disciplines. Nevertheless, the integration plays huge part in effective project evaluation. So usually technical disciplines like, for example, reservoir engineer, process engineer, and economist, I would say, also technical discipline, work together. And there is someone integrating the project. For example, I did this in Shell as project evaluation lead. My task was, sorry, I forgot geologist, very important person. My task was to work with these 4 disciplines to make sure that we unite our knowledge and understanding of the projects. Okay, so next step is to define the strategy. Of course, big companies, usually they already know what they're looking for. There is a special strategic department working on M&A strategy. So why is it important? It's important to define M&A target. For example, the country when we want to acquire a company, or particular areas or development stage of the project. For example, it can be exploration project, or it can be developed project, or it can be a project which was already the project which was already appraised. Some project with good flow test. If flow tests are bad, you can imagine that it's, for us, it's exploration project, right? Because if we don't have data, if we don't have reliable data from low tests, we will not be able to use this data in our evaluation. So it will be like exploration. So how do we make these decisions? Which project to choose? Again, it all comes back to the strategy of the company as well. So for example, if company is hungry for cash flow, then obviously we want to acquire good development project because good developed project because it will give us cash straight away. But it's very hard to get good developed projects nowadays, as you can imagine, because oil and gas markets is most big projects nowadays, they belong to the state companies, and of course it's very hard to get access to good development projects. So what state companies, I will use example of Russia. So what do state companies looking for usually? In Russia, for example, they're looking for large investments and they're looking for new technologies. So they give exploration projects for unconventional reservoirs in Russia, for example. So if any majors want to join such projects, they will be welcome in Russia. Otherwise, it's really hard to find good projects with cash provided. Nevertheless, there are such cases as well for small companies. So it all depends on the time as well. So we are going to speak now about the next factor, price. So how does price influences M&A activity on the market? Okay, when price is low, it's good time to buy logically, right? So price influences capitalization of the company. And the lower the capitalization is, the cheaper the company will be. So it's a positive factor. Nowadays, it's time to acquire. So you will ask, why don't companies run M&A heavily? Now we see more divestments coming because they need cash, right? There are different methods to acquire finance for acquisitions. So it might be debt or it might be equity. So it all depends on the financial balance of the company. Nowadays, everyone is hungry for cash, so it's very hard to find additional investments for the projects. And then we come to the next important factor, defining the strategy of acquisitions. So some companies, like one of my clients I worked with, for example, they might look for distressed assets, basically assets which have problems. For example, these assets might have a lot of debt. They own a lot of money, which make them cheaper, right? Which make them also, which make them more stressed, which make them more attractive for acquisition, because it means they're ready to sell their company as soon as possible, as cheap as possible, to pay the debt. So that might be a case as well. Another important factor in acquisition, we spoke about areas, some like country, some companies might have strategical political connections in some of the companies. So for example, strong relationship in the Middle East, strong relationship with Russia, etc. There might be sanctions playing a role, like in case of Russian American companies nowadays. So it's quite complicated. As you can imagine, there are different factors influencing this decision. So I would say financial and commercial, political factors, and also technical factors. In terms of technical factors, it's very important to take into account the capabilities of the company. Technical capabilities are very important because it defines the type of project the company wants to focus on. For example, if company has strong capability in heavy oil development, then maybe heavy oil fields might be a good target. They might be less attractive for other players because they don't have these capabilities, but it might be attractive for our company. The same with offshore, the same with unconventional reservoir, for example. Again, nowadays, governments prefer to provide M&A opportunities for the companies which have strong technical capabilities, which play the role kind of contractors for state companies, good kind of contractors with heavy technical capability and investments, of course. This is also a very important factor. Okay, so we spoke a little bit about strategy. Of course, it's a very complicated process. Like in MBA, we usually would say SWOT analysis is required, definition of strengths and weaknesses of the company and opportunities of threats in the market. All this is analyzed. And it's very, very complicated. There are a lot of tools used, and also financial state of the company. So this is what defines our strategy for acquisitions. After we came up with the definition of which kind of targets we want, we starting the screening process. So we have to look and decide which fields we are going to look. So usually we choose a set of fields. They might be quite different, or they might be quite similar. They might be in different regions. So it all depends on our strategy. And the way we do it, we analyze all available information. It might be from internet, it might be from databases. What majors do usually, they pay a lot of money for all kind of studies and databases available, sold by consulting companies in order to get access to this data. Because as you can imagine, a lot of this data, state data, and they are secret in many countries, I think in all countries actually. And in some countries, in some regions like Saudi Arabia and Russia, it might be quite difficult to get access to this data. So the companies, of course, they have to use legal ways to do it. So they have to spend quite a lot of money in order to get access to the information. Okay, let's say we got access to the information, we ran our analysis, and we came up with the set of fields we want to buy, or the set of companies with particular portfolio we want to buy. So what's next? The next step is to get the data, the detailed data about the companies and the fields themselves. And it's more complicated. So sometimes companies are open about their goal of acquiring or merger. In this case, I think it's more about acquisition, particular company, because they might be, for example, political reasons. One of my clients had bad historical relationship with one of the owners of another companies. So we had to be secret about the acquisition. Usually it's quite secret process, so no one wants to announce too early that they're bidding for a particular company. So usually it's commercial secret, which is not shared. But yeah, usually we know who is looking for which company. There is some competition, and the price is defined not only based on evaluation, but sometimes it's the bid price also plays a role. So you're looking at competitors and thinking, okay, how much they're going to pay. So this also might influence the price of the project or the company we want to acquire. Okay, let's have a look at the good case. When we have good relationship, we are open about the selling the company, and we can get access to the data. So This data might be provided sometimes through investment bankers. So it means that they share with us so-called data room. Data room basically is online depository. It might be online, might be on computer of the seller only. So again, it depends on the case, because some sellers, they prefer not to share the data online, and you have to travel to their office to have a look at the data, and you're not allowed to record or photocopy the data, because again, these are secret. But some clients, they're quite open and they can send you online data and you can have a look at it. It all depends. That's the first thing about the data. The second thing is availability of the data. So I don't know why, don't ask me why. Some sellers, they just prefer not to organize the data properly, which plays against them. But it might be that people don't have good capability to organize the data, or there might be some reasons, no time or whatever. So unfortunately, it might be case. So it means that people have to spend a lot of time analyzing data. Which data is available in data room? So there is all set of the data about the company. There might be legal, it might be financial data. There is the data, commercial data, there is technical data. So for us, it's very important to look at the technical data. So this is what we are looking for. Basically, it's everything, all raw data available. For example, flow test, pressure data, production data, all reserves reports, everything available, drilling reports. So the first step is to go through all these to analyze the data and to see whether the data is good or not. It's also important for acquisition, because if we don't have good data, it's very difficult to evaluate the company, right? And it becomes more risky. In some cases, it's allowed to communicate with the seller. For example, for consultants, in my case, I was able to communicate sometimes, or through investment bankers with the seller. Sometimes it's not allowed. So there is no way to get more data, and you have to deal with what you have. Sometimes you have to be creative. And of course, chairman of the company or CEO, your workers, they might understand the importance of getting data, but sometimes they want this deal so much, they believe in it so much, that you just have to deal with what you have and run the evaluation. Okay, so now we are getting to the next step, where reservoir engineering is going to play an important role, reserves and resources, and geology as well. Sorry for forgetting about geology. Geologists play a very important role, because in most cases, deterministic method is used to evaluate the company, which means that maps will be used to define reserves, and recovery factors from analogs, for example, will be used, especially at the early stages of evaluation when we might not have available data. That's what we're going to do. And then we have to come up with production profiles. Again, it all depends on the data availability. If we have good history of production, if we're lucky, if we're looking at a developed field, then it becomes quite easy for us engineers, because we can use decline curve analysis, use production data, and come up with the forecast, which we can use for the evaluation of 2P reserves. Because 2P reserves, this is what we are looking for in case of project evaluation, most probable reserves, basically. Okay, in some cases, this data is either not available, or they might be, for example, flow tests. With flow tests, again, we have to be very careful. So what we do first, we evaluate the quality of flow test. For example, in Russia, a lot of flow tests, they were done during Soviet times in 70s. So you can imagine that different types of technology were used. That's the first problem. The second problem is that there was different approach for finding fields that time, because in those days, professionals were looking for fields producing a lot of oil and gas, right? But nowadays, unfortunately, we don't have access to such fields in most cases. So we're looking for smaller production, which was not interesting at the time. So it might be that appraised the well, didn't flow immediately, or they didn't do it properly, or there was mud fluid invasion or whatever, right? And they write it as dry, but it might be not dry. So we have to look at the data and try to understand what are the risks. Or for example, we might see water, but it might be water coming from somewhere else. It might be crossflow behind casing due to pure cement. For example, we have this problem very often in this we have this problem very often in these old wells, especially in Arctic environment, for example, where temperatures are very low and there are all kind of problems associated with permafrost, etc. So it's it's quite difficult to understand whether we can use this flow test or not. If we have good flow test, at least it's something, right? And we can run some kind of analysis. But if not, we have to be creative as engineers and come up with the best estimate possible. How do we do it? We use analogs, of course. And again, a lot of different sources are used for analogs. Small companies, they usually don't buy expensive databases from big consulting companies. So engineers will have to search for these data themselves, using their experience, using people they know sometimes, using all available open information. And usually we come up with a type curve for a particular well. We just multiply it by the amount of wells we're going to drill in a particular year. Okay, so now we come to the another important step. So we have to decide how we're going to produce per year, right? Because in evaluating all the companies, it's important for us because we basically to create the schedule of our investments, the schedule of production, etc. So we kind of have to come up with real development plan. So this is the connection with development planning, with the name of this lecture. But it's not we have less time, right, to come up with development plan in case of evaluation. It's not firm development plan. It's not what usually engineers do in development. It's quite different. It's the best estimate we can run on the based on the information available. Nevertheless, we have again we have to be creative and come up with some sort of plan. So how do we do this? Okay, so first of all, we understand it depends. This is where process engineers play an important role. First of all, we have to understand, do we have good infrastructure around? For example, there might be pipeline nearby available. The second question, can we get access to this pipeline? For example, Gazprom might own this pipeline, but they will never agree to share it with us. So we'll not be able to send our gas. If we cannot, for example, use the pipeline to send our associated gas, it means we will have, and it's not allowed to play in Russia. There are huge fines associated with that. We don't have choice. We'll have to do something with the gas. So it means we have to spend money and it will go to our capex. That's one example. Another question we ask, is the RCPF available nearby? If the RCPF available nearby, we can just pay to Lukoil, for example, or any other company to use their facilities if they want to share them with us, if they have capacity as well, right? It might be case, might be not the case. So it's quite a difficult question as well. Okay, another interesting part is capacity, how to calculate the capacity required for facilities. Because why we're looking at all this? I'm going to talk about it a little bit later to summarize why we're doing all this. But now let's first talk about capacity of facilities. It's quite difficult. So first of all, we have to understand, okay, there are no facilities nearby. It will require us at least 3 years to build facilities, minimum. Okay, let's say 3-5 years. It means that during these 3-5 years, we will not be able to produce anything because we don't have facilities. But we can still, for example, truck oil, if there is oil. There is some cost associated with that, but if it gives us some money, it might be good. So, okay, let's assume that first 3 years we just truck oil, we deliver it by heavy trucks, and that's it. And we wait for construction of facilities. So again, capacity. First of all, we have to define the drilling schedule. How do we define drilling schedule for the analysis? We just have to be realistic and creative again. So what we're going to do, we're thinking about hoist we might have available for the project, and maybe some experience in the region knowing that, okay, it makes sense commercially to use this amount of hoist and drill like 100 wells, for example, per year, etc. during this amount of years. Something like this. So we come up with the estimate. And this estimate will be used for maximum capacity per year evaluation for the facilities of infrastructure. And basically, based on this, we can play with different scenarios to find the optimal one, the most commercial one. We can define the plateau ourselves based on the most economical value we get from the project. So there will be a lot of tests for that. Okay, so now why are we running all this complicated technical evaluation? The main purpose is to calculate net present value. There are some other financial parameters used in evaluation, for example, investment on return, etc. Let's talk about NPV specifically because that's the most important value which we're looking at usually. It should be at least positive, right? Hopefully, but it might have even positive, right, value. It doesn't tell us much. We want to get money. So what is net present value? Basically, net present value is summarized cash, discounted cash per year. So cash, the money that you get from selling oil minus all the costs associated, profit, right? But discounted. So why is it discounted? Because usually it's 10-15%. Why is it discounted for the oil and gas industry? It is discounted because if you investing in this project, right, it means you cannot invest your money in other projects, so you're losing some money this year. So this is the percentage you're going to lose by not investing it somewhere else, basically in the oil and gas industry. So that's why we discount our profit. Okay, let's have a look at the most interesting part, how profit is calculated. Maybe you know from your economical class that profit equals revenue minus cost. So what is revenue in our case? Revenue in our case is production of oil and gas, or them separately, multiplied by the price. Okay, with production it's clear. We build this forecast ourselves. What about the price? So price, yeah, how to define the price, especially nowadays when it changes every day. It always changes every day. So usually companies come up with global parameters. They set up their own parameters. Usually it's a big secret, commercial secret, and they use their best estimate. So it might be optimistic, it might be pessimistic. So they're looking again at different scenarios. There are different analysis sensitivities run for the price, etc. So we kind of understand what's going to happen in case of price change with the project. This is very important. Okay, let's have a look at the next part, which is cost. We split cost into two different type of costs. So one is CAPEX, capital expenditure or fixed cost, and OPEX, operational expenditure, which is variable cost calculated per barrel. So our CAPEX is kind of course, it depends on the amount of oil we're going to produce because our facilities we built, right, for infrastructure, for example, or the amount of wells we're going to drill depends on the barrels we're going to produce per year, of course. But still, it is fixed cost. So it doesn't give you, it's the cost which we have to run anyway, and it's the cost which will be run in the beginning of the project. So for drilling, for example, and for infrastructure, for facilities construction. So during 3-4 first years, I would say 5 years minimum, we have to be expected to be in loss, right? Not to have any profit. It's normal because we investing. So this is the time when we have the biggest investments. So another type of cost is operational cost. So it's variable, depends on the amount of barrels. For example, it's cost of oil production. Basically, for example, pumps cost, electricity cost for running pumps, or chemical costs in case of facilities. For example, workovers cost, because there is always something happening in the house, right? So all this will be operational costs we have to take into account in our project. Okay, so we spoke about revenue, we talked about cost, and now we have to speak about tax. Taxes in oil and gas industry is quite big because state wants to earn money, right? As you know, I think everywhere in the world, I guess, oil and gas reserves and resources belong to the nation. So every company, all companies, they get licenses from the state, and they have to pay for that. So they might be different taxes. For example, they might be royalty paid. They might be sharing production agreements when also companies have to share production with the state. So they might be different types of arrangements, or they might be just tax paid per barrel, for example. And there also might be different incentives, tax incentives. For example, for depleted reservoirs, right? So let's say that if the reservoir was in production for 50 years, usually the state will try to help to companies by introducing special incentives for the project. So it will be cheaper for the companies to produce. They also might be incentives, for example, for conventional oil, right? For oil with low permeability. So usually there is permeability specify less than 0.0 millidarcy, for example, because usually government knows the fields, the resources that they have, the type of reservoirs, right? So there are special people working on that. Or for example, heavy oil, like, I don't know, for heavy oil, more than 1,000 centipoise, there will be special tax incentive. And it's very important because usually, or for example, like in case of Russia, different type of areas in Arctics, they will be special tax incentive, or they might be also special tariffs for transportation of oil and gas, which companies have to pay as well, right? So again, governments, they kind of try to get the value for themselves, get money for the state, which is important, right? But they also try to make sure that companies invest into development of oil fields. So they have to balance this properly. And what we see in Russia, for example, when there is crisis, like now, unfortunately, tax incentives are run off. We see it quite often. Tax incentive regimes, they change all the time. It makes sense from one side, but it's also, they might be introduced back sometime again to have investments, etc. Usually these incentives, again, they introduced for the companies to invest into difficult projects, because as you know, nowadays there is not so much conventional oil left, so mostly all projects are unconventional. Okay, so after all this, we come up with NPV, and we finally find the value for the project. I'm not going to talk about finance much, and I see that I'm talking for too long anyway. But usually, what do investment bankers do? They usually come up with the deal structure. Again, how to attract investments, how to pay for the deal, how to pay for the company, how to pay for the project as well. So, etc. Is it merger, is it acquisition, and so on. Another important thing, last thing I'm going to mention, is estimated monetary value. This is important parameter that we're using for assessing risks. So as you can imagine, what we are looking for in these projects, we are looking for upside. There are always risks associated with projects, starting from commercial, political, technical, and so on. So when we start screening of opportunities, what we do first, we look at risks and we look at upside. So what can we get out of the project? And this estimated monetary value is basically the parameter which helps us to evaluate the influence of risks on the project. So basically, estimated monetary value is possibility of success of the project multiplied by the impact. And so possibility of, so basically it's NPV multiplied of the possibility of success minus 1 minus possibility of success, which means negative side of possibility, right? Multiplied by the cost associated with exploration, for example, case for exploration project, etc. So this is the basic parameter. So we create decision tree. So we look at different risks and we create decision tree and we evaluate each risk. And in order to come up with total estimate monetary value, we just summarize this risk and see whether it makes sense to run these risks. Okay, I'm going to stop here. If you have any questions, you can ask me further. It was quite general overview. I hope useful. And I'm giving the word to other speakers.
Actually, we have some questions. The first one, does discount factor account only for opportunity cost, not for interest rate or inflation?
Of course, yes. For also for, it's all included, right? When we're talking about investments, it's all part of it. So of course, interest rate and inflation, they play important role indeed.
Mhm. The second one is
Ahmed, excuse me, Diana and Ahmed, can we move to the next speaker because and we move the question to the end, because I think we still have two speakers. Unless we can have another question for Diana, then we move on to the next speaker, if you don't mind.
Okay, no problem.
Okay.
Okay, no problem. Okay, on behalf of Future University and SB Future University, I would like to thank you, Engineer Diana, for your illustration and, clarification. It was our pleasure to have you with us today.
Thank
Thank
you.
you for your time and stay safe. Uh, Now, guys, it's time to introduce our second speaker for today, Engineer Mahmoud Abdeldaim. He has a wide experience in our industry as he worked for PB as a senior reservoir engineer, and he worked for Canadian Natural Resources Limited, and he now working as senior reservoir engineer at Qatar Petroleum. Engineer Mahmoud, can you hear me? Hello.
Thanks, Ahmed. Yes, I can hear you.
Okay, kindly share your screen. Go ahead.
Thank you. Let me share my screen first. Can you see my slides?
Yes, it's clear. Clear.
Okay. First of all, thank you very much for giving me this opportunity to share some experience with you. It's a pleasure. And thanks for Engineer Muhammad Zahran for inviting me to the forum. I'd like always to share knowledge with the young engineers and early career. So thank you very much. Second, just since check the time. What time do I have to finish my slides?
Engineer Muhammad, you can reply about that. I think we have
15 to 20 minutes, and that.
Oh, okay. It's quite tight. So, okay. I'll try to do my best, and if the time can't fit to deliver the message or the things that I'd like to share, then we can do it later on to continue on what we'll be presenting today. So first of all, the case that I'm going to take you through in the 15 to 20 minutes, something in the North Field and in the North Sea. It is very mature field. It's mature water flood. So I'll go directly to the things, to the point. So the thing is to watch as we walk through the slides is what kind of question that or decision that you have to make at early stages and as you walk through the development versus the late life challenges. What key risk and uncertainty as you move from the early stages, again, as your development progress to the abandonment. And then the most important thing, of course, which walked with you through this journey is the tools and approaches and assessment. So the case is, this is the giant oil field in the print sequence. So this is print sequence in the North Sea. It is the recovery factor as I was there is close to 50%. It is stacked of the fluvial reservoirs. It's marshy rocks. It's very, very high quality rock. The water flood is designed for this reservoir to even to keep the well naturally. You can imagine this just give you the flavor of what you'd expect the well capable to produce naturally, even with 95% water flood, like 15K barrel fluid. So it's a very high quality reservoir. And the facility is offshore platform and it is very mature. You will see it's early 70s. And the strategy is to, at the time that I joined, is to keep injecting as much as you can to just inject more water to recycle more bore volumes. I'm sure that you know the bore volume versus recovery curve in your mind. As you inject more, you recover. And then to maintain the reservoir pressure above this limit, this is to keep the maximum production from the field. Remember, the water flood here is act as pseudo artificial. Left, it's just maintaining the pressure so the wells can flow naturally. It is commingled strategy. I mean that from the any field that I work with, there is no continuous section vertically. There is always heterogeneity for the permeability point of view. So it is the strategy at the time, again, is to drill from top to down and then keep injecting as much as you can. Then there is no surveillance. Even you can't shut injector to get pressure. You can take it from the dynamic data. No PLTs, just for the water shutoff. And allocation based on KH. The simulation was outdated. This field was developed by Chevron and then was taken over by the Canadian company. I think there was a company in the middle. So the simulation is abandoned once Chevron sold this reservoir and this field. Okay. So just this is what the production profile. I just took the sensitive data for confidentiality, but this is hundreds of fluids that is producing and injected. So the green is the conventional oil, and the blue is the water production. Dark blue is the water injection, and this is where I joined at the end of this diagram. So you can see very mature field, very mature, and you can see just to keep thinking about the question up front at the early stage of the development. What kind of question that you would ask? Which concept to develop this field? Is it platform, subsea? What the pressure maintenance? Is it water flood, gas injection? Is there in aquifer? What the level? Artificial lift in commingle versus dedicated rates? All these big question need to be asked at the early stage. But what would you expect as a time that we reach it around 2015 and the production is around 96% or 90s percent water cut? You will see just keep in mind, this is what could be kind of question. Is it over? Because when you look at the objective that at the time the company wants, the first line is very important, and I want to keep this is in your mind as you progress in your career, to maximize the field recoverable reserve. This is quite technical definition. Any company that it is to maximize the cash flow and the net profit, is not to maximize the recoverable reserves. So for the national oil company, the terminology is correct. For the international oil companies, is nothing about reserve is fine as long as it makes profits. So just keep in mind this. I meant to keep the statement as it is, but it's important to highlight the difference between the recoverable and the cash flow. So to do that, you need to have ask your question: is my water flood efficient? I'm talking about this is a challenges at the late stages. Can I identify the infill opportunity easily, bypass the oil, compartmentalization? Which tools do I need to do that? And then to achieve the company, has to be number one, achieve the company economic targets. Remember, the North Sea is very difficult environment to invest. It's the highest cost per barrel in the world. So back in 2015, the oil price was 50, the cost per barrel was 55. So just imagine that you are responsible to develop this field, but this is the setting there. The company is creating negative cash flow at the time. And then you want to identify opportunities. So it was very hectic time to come up with a strategy. So the second thing is there is a high uncertainty about the surveillance, and this field was operated by many operators. Chevron, I think I can't remember the second company, and so on. The new team, we were like a new team, and it is very marginal economic. So the approach that we said, let's first of all, because we are short of staff, economic challenge, we have to prioritize the things, and we have to integrate and to be consistent, because this field is, I forgot to mention, 3 platform, and it is managed by platform, from platform and also from the subsurface. So there is I think like three teams managing this field. So it is very important what any team does, the other teams are doing the same. So we have to come with consistency. So just keep in mind, this is very important slide. I think Engineer Muhammad maybe shared with you something about how the risk and uncertainty developed across along the life of the fields. Many people believe that when you start, can you see my cursor, by the way?
Yes, yes, we can see.
Okay. Okay. So what in many references and the publication, you would say that the uncertainty is quite high at the beginning, and then it narrows down as you go along the life of the field, which is right and wrong. And as I keep always saying this, the uncertainty never been dies out. It is exists all the way. What happens as you walk through the field life, you replace some uncertainty with new uncertainty. However, this correct for impact. So any big impact would happen in the development if you didn't get your risk and uncertainty correct. You will have the biggest hit at the beginning, because here the time that you take the big decisions, the big investment, the big capital spend. But as you walk through, you can turn things around with minimal cost. So this one, keep in mind, the impact is the highest at the beginning, but the risk never dies. So just remember this figure. This bridge is a famous bridge in Scotland. So the risk and uncertainty exactly like that bridge. Anytime when you start with some range of uncertainty. You walk through and work this uncertainty and reduce them. And then after a certain period of time, you start with new set of challenges and uncertainty. And then you work through them and so on. Nothing is risk free at the once you finish the first step. Keep in mind the risk always there, but the impact is different according to the decision that you'll be taking. At the beginning at the highest, because this is where the highest the decision that to. So I tried to work it out the sequence of the slides. These slides came as you see it now. It came after I did a lot of assessment about how can I make a catalog for my risk and uncertainty as we speak about the field 2014. When I think you see the catalogs for the risks at 2019, 970, it would be a different mix. So the ingredient would be different. But here I put, after I did some high helicopter view for the risk and uncertainty, I came up with some categories about the in-place volume, sweep, reservoir quality, connectivity, and also you can see here, maybe many people say data quality. Yes, data quality is one of the highest risk. If you rubbish in, rubbish out, and if you can't measure it, you can't manage it. So well integrity and wells rate, and I listed the subcategory of each risk because I want to work it out as I walk through. So this one is not coming from just I open one slide and I start to do this stuff. It came after I looked at initial assessment. I came up with the list of things, and then I started to put, and it's iterative process. This is the most important one, similar to the previous one. Would I work all of these things? I have limited time. Which one I have to work first? So you have to come up with risk versus impact. So again, this is very initial assessment. I said you may see here the one that I put here, the highest uncertainty and the highest impact is the well integrity. And you may be surprised that reservoir engineer look at the well integrity being the biggest threat to the field development, and the other stuff which is nice to talk about. But for me, was the highest, because remember, in the first place, the water flood here is act as artificial lift as well. If you lost a well, you lose a sweep and the pressure, and then the well will die out. There is no gas left to give you a hand to produce on the low pressure, and so on. So for me, was the one is the biggest one that I shared my concern with the production and well integrity department. They need to understand the impact of losing one well, two well, and so on. So we worked out the well failure case, and we came up. This is highly impacted one. This is one of the highest. Quickly, I'll take you through this one as how I worked out this one. So again, everything I mentioned here, there is some work behind putting it in this square. This is the low uncertainty, low impact. This is the high uncertainty, high impact. So diagonally, this is where you should put your focus on. Again, which one? This is the one. But I'll give you one example how you work it out, this stuff. So in order to develop this field, I put like a map to how the approach that I'll be following. Muhammad, how I'm doing with the time? Sorry, I forgot to. Ahmed?
I think you still have some time, Bashmans. How long do you want to finish the slides?
I think first of all, am I walking very fast, slow, repetitive?
No, I think you're doing very well in terms of going through the slides. The only challenge to us is the prayer time. So this is the biggest challenge to us, and it will be after 25 minutes. So I think
Let's take this one.
Saduq will have maximum 10 minutes, but at the end we need to keep some time for you to catch prayers.
Okay. So let me continue. When it comes, it will come. Okay. So things that start to do things that you have to top down and bottoms up approach. So because we are a platform and we are subsurface, so we have to understand the platform strategy. Do I have capacity on the platform and so on? So I have to understand everything: the water injection, production capacities, number of wells that can be drilled. For the reservoir, I have to understand the layers, and I highlighted a couple of print sequence layers here because this is where I see the value. So I need to come up with a strategy for these two layers because these two layers are very, very, I think this is where I see the value of the remaining reserve. And then the area strategy as a big area is the how is the pattern in the area? Is it is it peripheral water injection, infield, and so on? And then with the surveillance and tools, I have to come up with two things: the intervention strategy and new wells. Again, I have to work in the triangle: data, people, tools. And remember, I have limitation in every part of the triangle. So the data, I have no budget or very limited, very challenging historical data. And then the production allocation is quite uncertain because it's KH based. There is no PLDs. People, very small team. Tools, there is no simulation. I just was told by my team leader at the time, there is no simulation, you have to forget it. So what kind of decision that I want to make in this field? Two things. I need to understand the energy because I'll take you, this is through one of the puzzle that I'll take you through in the next few minutes. There was a puzzle about this was the first question that I was asked to assess. And then in the second thing in my mandates to identify the infills. So the two things, they understand the energy and the infills. Tools wise, if you want to answer these questions, is based on the decision that you won't take and that uncertainty. If I want to do this, as you can see, I should have simulation, but there is no simulation. It's not on the table. So you may have Excel sheets, MBALs, classic techniques. So you see the difficulty in this is 70 years or 50 years of history, and then you need to identify infills, you don't have simulation, and so on. So again, it's a difficult situation. Here, this is the pressure of one of the main area in the field. This is the first slide that was showed to me, and then it's like, this is the material balance, but in Excel. It is basically the compressibility of the water. You can, if you know the equation of the compressibility, and you almost producing 96% water cut, it's water, it's single phase. So you can use the water compressibility equation to estimate the reservoir pressure from the injected volume, knowing that you know the oil in place, the in place volume. So this is simply, if it's not clear, please ask me at the end. I can elaborate more on this. But what you notice is since 2012, there is the calculated pressure from the material balance based on Excel is deviating from the actual data. And you can see that this is a static pressure in the well, but the material balance calculates less pressure. So the first question is, I have a negative voidage, and the voidage is the difference between what I'm injecting and I'm producing. And why the pressure is constant? Do we have aquifer that is activated? And the reason for that, there was a nearby field that was producing huge field and it was abandoned. So the thoughts that came to my mind, if this nearby field is stop production, then maybe the aquifer find its way to us. And then the second question is, do I need to replace the failed injectors? Because as I told you, the well failure was the key risk, and we had well failure at the time. So if this is a question that was asked. Then this is a cartoon that I came up with. If this is the energy catalogs for any reservoir, and this is in particular my reservoir because I know I am injecting water, there is aquifer, and then I have the things that I'm not sure about. I have to, like a detective, I have to question every element in the system. Is the oil in place is correct? Is the pressure measurement is correct? The rates, the three rates that I'm producing. And then also it has been observed that there is a shallow reservoir that's being pressurized, which means that there is some leakage from this, not necessarily from the reservoir, maybe from the injectors. So there is something leaking in the system, is not a closed system. So if you have things here, and this is just to think about it, the oil is the most important things that you measure. This is the money. The gas as well in the North Sea is very important, valuable. So the water injects a single phase, and there is a turbine meter on the each injector, and the aquifer, and you can see the two question mark. I put the aquifer and the produced water. Okay, so this is the two things that I'm conscious about. So it's a simple material balance. It is based cutting, as you can see, maybe seeing here, this is 3-tank material balance. And dividing this field into 3 tanks based on pre-assessment and the very classic assessment. I looked at the production history, pressure history, and the dependency between things, even to establish some connectivity. So it is post assessment. Came with 3 tanks material balance, and the geologist and geophysicist we came up with 2 scenarios for the aquifer is based on the farewell, the spectral decomposition about how the aquifer extended in the basin. And we come up with 2 scenarios. By the way, the field that was abandoned is sitting here, somewhere here, close to the big aquifer. So the thought is this big aquifer now redirected to this small field here. You know, this big field is, this green blobs here this is a big field, the whole field. So if you start with the aquifer and you said, okay, this is the pressure data. This is the pressure data is the black dots here. And this is the using 3 different aquifer setting is infinite acting, which is a blue, and the OD model, which is the, you can see here, it's for me is red, and the green is the 4-time model. 4-time model matching the small aquifer, and the infinite matching the big aquifer. So what you can notice is, remember that if I remember the production, I don't know, it's far way back. So the production, we had like 2 to 3 years natural depletion. There is no, the water injection started after 2 years. So if you want to measure the aquifer strength, it is here. It is here before the injection starts. So what you can see here that any model can match the early time, but whatever you do, even the infinite acting wouldn't match the pressure stability at the end. So it's not aquifer by any mean that sustain the pressure that time, because you need to have even if you have a very strong aquifer. But also, this is a very important thing. Where is the aquifer coming from? Because here, if this is like a 30 kilometer and the aquifer comes from here, even if it's infinite acting 1,000 times, it wouldn't be felt here at this end. There is a big transition between the aquifer and the oil. It's not like this material balance. Material balance assumes that any depletion will be felt in the aquifer. In reality, there is a pressure gradient that would be felt. Okay, so the second thing is, and then I said, okay, so if you put the data in the spreadsheet that I showed you in the material balance, you exactly replicate the case. This is the simulated pressure, and this is the actual pressure. So the only thing that is remaining to play with, I said there is uncertainty in the produced water, and the produced water during this part of time, and this is, I came up with the factor that give me matching the deviation from here. But to just be clear about this point, because any engineer, for example, when you do a history match, you can match anything, but is it realistic? Does it have any legs on the ground? Yes, we spoke to the facility engineer about, do you have any metering issue during the transition during this time? And actually, they measured they did the metering assessment in 1996, and we found that it deviated by 15%. So I said, as a concept, it's correct. The water, produced water, was the one that is creating this false energy understanding. It's being pressure supported, but the reality is not. It's a produced water allocation factor. The meters were off by 15%. So playing with this factor now is making sense that is not aquifer and it is the produced water. Once it is fixed, then you have the history. The only thing, as you notice at the bottom, I didn't history match all the history. I just stopped at 2000 here. And as I said here, this is a case now. So this is the matched history in the material balance. So you can see this is, first of all, you can see the field is not a single tank. It is multiple tanks because it's quite long field and there is small faults, minor faults, pressure difference between, or the pressure gradient from the flank to the crest and so on. What you can see here, the part that is history matched in the you saw on the previous slide is about this. Now this is a hidden history. After this is matched, and then I put the actual data, and we sure that the meter was fixed in 1996 after 1998. So let's say I took the data in the database and I put it in the material balance, and this is nicely matching the actual data. So this was hidden from the history match, and then everything talks to each other. You can see this is a VRR, voidage replacement ratio. It is declines, the pressure is declining, and the voidage is increasing. I mean that the voidage deficit is increasing. The question now, if you ask about the aquifer strength, I put it in the risk and uncertainty as something that I'm not sure about. Now I'm sure about it, or at least more certain about it. So at the early time, you can see the pressure was dropped to the lowest in the field history to 4,500. And this is the maximum influx, even using the infinite acting. So if you want to understand the volume of influx that could support the production, it is 70K. Remember, this field is producing 300, 400K. So the aquifer wouldn't support the development. Back to the question, I think for the sake of time, I cannot stop here, but I'll try to jump between the early days and now. So you can imagine at the early days why these people thought about having the water injection, despite they have aquifer, it's active, it's producing 1,000. So if you want to have the aquifer, you need to deplete. This is even further. If you do that, you need to invest in gas lift or ESP, artificial lift. So the decision now, whether to make the water injection as a system to support and sweep and pressure support, or to have two systems. I can utilize the aquifer, you can, and this has to be economically calculated. If I operate the field, and remember one of the water flood key question, which pressure I should operate the field at? Classically, when you look at the subsurface and fluid displacement, it is nearby the bubble points because this is the highest mobility. But you have to look at the other stuff. I need to produce very high rates. So if I stay at the close to the bubble point, as the bubble point is low, then I have to produce low liquid rate, oil rate from the field. No, I wouldn't say, yes, I can lose something, but I'll generate cash flow. So this is more economic. So this is the kind of things I want to just highlight to you, that this is the kind of thing that you may think about upfront of when you develop the field. This is why I need to think about water flood, even I have aquifer, because the combined decision that I explained, if they want more from the aquifer, you need to take the pressure down to 2,000. The aquifer influx will be increasing, but you need artificial lift. So the economic decision now is using gas lift plus aquifer, or using water flood only, and you will stop the aquifer. Remember that once you increase the pressure, the aquifer influx reduced to 10,000. When the pressure declines, the aquifer influx increased again. So this is a trade between, can I put the injector in the aquifer to stop, it will stop the aquifer influx, but it will support the pressure. So this is a trade between the things. Now, the key question at any aquifer, what the level of aquifer support? I think this slide answers the question. Where is the entry point? Is it coming from everywhere? It is from north, from east, south. Which layer? Is all the layers actually connected or efficiently connected to the aquifer or not? So to come up with the assessment, if I go back to the slide where I put the aquifer now, this slide, this now, was I didn't change it. It was medium uncertainty, medium impact. Now after this assessment, I have it pulled down here because I'm quite certain about it, and it has some impact because I can benefit from it. But this is how the risk and uncertainty ties to the technical assessment. You start with some idea. I don't know because this one I did it based on this one. I just tried to put my understanding. Then I started the technical assessment of the energy, and I came up with answering some key questions using this one. Now, after I did that, I came up with the level of support. Then I changed the risk matrix and so on. I think I have. I think I consumed my time. Am I right?
Yes, yes.
Little.
Okay.
So do you have production now or for the field?
You mean it's still producing?
The production performance after you did the work, or is not executed yet?
No, executed, but this is not yes, the upcoming slide, the way they changed the depletion plan or the development plans, taking into account all the factors that I mentioned at the beginning. It was implemented in 2016 at the time I left, but I knew I keep contact with the guys. I think two wells, the two first two wells, one came slightly below the expectation, but the other one was quite surprising for everyone. And you just remember this second well that the intervention plan, it was intervention, so we stopped drilling. It's all about utilizing the current wells. This is the thing, is because there is no budget for remember the company at the time, we were looking for the low hanging fruits. It's about the low cheap oil, the cheap oil, which means the intervention plans. So the second well increased the production for the company by 2000 divided by 12, it's like 20%. 2,000 divided by 12,000. This was the production. That's from the single well. So I know they executed the plan for the 2016 and 17, and they started to drill in 2018. So the 2 years, this plan was for rigorous intervention, changing the water flood using, instead of dedicated, being selective, and utilizing the wells, some conversion. I used the wells to be converted into producer, and the producer to be converted into injector, and so on, changing the pattern. Looking at the behind pipe values and understanding I think it's yes, the rest is about how I came up with the strategy, but I think is up to here is about energy. To just be an integrated topic, it's about energy assessment and how linked to the risk.
Thanks, Mr. Mahmoud. It was quite excellent, quite good presentation about showing the risk and uncertainties and how can you get something from the history and adding value to the asset. That's why I think this is a really nice move to Dr. Sadouk. He will talk a little bit more about the risk and uncertainties and how to manage it using simulation. But I think unless you have something to add, Bashmans Mahmoud, we can move to Sadouk.
No, I just stick to the timeline for me, so thank you.
Thanks, Mr. Mahmoud.
Engineer Muhammad, I think we don't have Dr. Sadouk haven't.
Dr. Sadouk?
Yes, haven't joined us till now.
He was on the meeting called SL. Dr. Sadouk?
What's his name?
Dr. Sadouk, I think he in the call.
SL.
Yes.
Okay. He can speak right now.
Dr. Sadouk, you can join. Okay.
Hello. Hello. Sorry, I was muted. Do you hear me all?
Yes, we can
Yeah,
hear you.
good. And do you see my screen also?
Yes, yes, we got it.
Uncertainties
We
and
got it.
risk. Okay, good. Perfect. Good. I think Engineer Mahmoud left it at a very good transition point, actually. He showed us very nicely with a practical example the use of the uncertainties and risk. And I wanted to kind of like step back a little bit and first of all, basically clarify the difference between uncertainty and risk. There is a lot of confusion usually, people making the confusion between what is an uncertainty and what is a risk. And let's not get into also more details on what kind of uncertainties we can talk about. So I want you to remember one equation is the risk is simply the uncertainty times the impact. And the uncertainties usually are associated to subsurface, but also economic elements that are out of control, yeah, of our control. So remember that, yeah. So let's say the well type is not an uncertainty; that is a decision. But the aquifer strength is an uncertainty. We don't know whether we have a strong aquifer or a weak aquifer. And how do we quantify this uncertainty? Is usually we associate the probability to it. Yeah, what is the probability that an aquifer will be stronger than a certain amount or bigger than a certain amount? Similarly, what is the probability, for example, that you have a large field or a small field? Yeah. But it's not only subsurface. Economic elements also, like the oil price, is a big uncertainty that will have an impact differently on criteria, economic criteria, like the NPV, as Diana was mentioning, right? How do we mitigate these uncertainties and manage them? Is by choosing and making the right development decisions. Yeah. So the development decision usually is a decision. These are choices between different options, and an example here would be, for example, the type of the well, whether we go for a horizontal well drilling or a vertical well drilling, to quote a simple one. To complete what Engineer Mahmoud was shown in that matrix, basically on the uncertainty and the impact, that are ranking basically this uncertainty and impact between different ones. The impact can be multifaceted, you know, so we could have uncertainties that will have an impact and basically a risk also that is higher on an economic criteria. But you could also think about other criteria like the operational criteria. Yeah, you know, if you drill a certain well with a certain hole size, would you be able to install a gas lift mandrel later on? Yeah, if you encounter that you cannot lift your oil, for example, at some point. It could be also an impact on the safety. Yeah, what is your composition of the fluid? Would you have H2S or CO2 or some type of gases that would affect the safety of your processes and the people? Good. I think this makes the point. Hopefully the penny drops by now. I will go to the next slide. So how do we mitigate the uncertainties, or how do we reduce the uncertainties? There are basically two ways to do it. Yeah, the first one is to acquire data. Yeah, acquiring data means spending money. You know, go for it. Have a phased approach. First you drill a well, collect the data, interpret it, and then so on. So you can basically measure it, and then there you have tools like value of information tools in order to assess whether it is worth to spend the money in order to reduce the uncertainty via acquirement of extra data. And the second way is to use the data that you have, but also use the physics. Physics are cheap, yeah. So you could integrate basically the physics, Darcy law, and the way that the different elements in the reservoir and then at the surface interact in order to better describe the multi-phase flow. How the molecules from the reservoir to the surface basically are moving. Ultimately, it's down to having a description of the pressure and the multi-phase, so the oil, water, gas phases at any point of the production system. Yeah. So I think also my colleagues earlier described it quite nicely. You know, models are not just the large simulation models that we see all the time. You know, the three-dimensional full field models. These are essentially subsurface models we talk about. But don't forget the surface models as well. Yeah, these are as important. Integrated production system models. These are the ones that do integration of the subsurface and the surface models. These are also quite important if you have, especially in the gas systems or the gas field development planning, where you know the back pressure is one of the most important elements that would control your production usually. And as I said, it's not just in large simulation models. It could be using type curves, yeah. So analogs or material balance, as has been shown in nicely in this example. So what are usually the modeling pitfalls? There is a tendency sometimes that people dive into complexity, means that they go look at all the data, they try to integrate it all into like really large complex models with complex physics, you know, to the 10th degree. This is usually results in even not only waste of time and resources, but also usually results in just recycling and really diving into the details as such. Also, sometimes you actually are anchored in on a certain realization. So that's what we call the anchoring bias, yeah? Because we wanted to believe that there is an aquifer, yeah, or there is no aquifer. We actually do not see that the data could be compromised in that case. And the last one is the lack of integration. So if we wouldn't have been talking, you know, together to the process engineer, to the guy on the top, then we wouldn't have probably guessed that the data was compromised in the example that Engineer Mahmoud was showing. And this is very important. So usually in the integration, what I meant by that originally is the subsurface people. So for the young engineers and then fresh graduates, you know, be curious. And then if you are a reservoir engineer, learn more about geology. And then if you are a process engineer, also learn about reservoir engineering and what areas do as well. So that the integration is important. So that is usually a very nice way and to reduce uncertainty for free, so to speak. So last but not least, a few kind of steps or rules of thumb in order to actually make sure that you are using the right model at the right scale to answer the right decisions is to make a plan. Yeah, so thinking beforehand and consider the risks and uncertainties up front. Yeah, so really think out wide. What could go wrong here? Yeah, is the metering good enough, for example? Yeah, are we overseeing the oil prices, for example, fluctuation? A third one is to start simple. Yeah, there is no need to go through like, you know, multi-million grid blocks simulation models. Start with understanding the energy in the system. Yeah, and bar models or just the compressibility on Excel could do. And then start to add details as you go. So really detective way. That's a good way to go about it. The last one is, needless to say, without repeating myself, is the integration between the disciplines. Yeah. So if you have a certain alternative or a concept, test it with other disciplines to rule out the ones that are completely like, you know, out of thin air, basically. Yeah. So consistent models are very important. And again, these are another free way to reduce the uncertainty without spending more money. Yeah. Good. I think I am at the end of my presentation. I'll hand the mic back to you, Engineer Mohammed.
Thanks a lot, Dr. Sadouk. And I think here we can wrap up our presentation. Today we started with Diana. She explained how can we invest and divest assets, and it was lovely to see how in such volatile environment we are working on evaluating assets and how big companies acquire asset and divest their asset. Then we move to showcase history and real cases from North Sea. Where Mahmoud Mahmoud shared his experience and his knowledge, showing the uncertainties and risk, how he managed in his case, and how he came with a plan. And lovely, last but not leastly, it was Dr. Sadouk who explained how we manage risk and uncertainties, and everything is coming together as integrated plan. So I hope you benefit from such session, and you learn something through this short school. And I'm sure there will be another chances that we can communicate further with the speakers today, and we learn further much more from them. Thanks for attending, and I was extremely honored to be with you today. I think we can end here. Floor is yours, Ahmed.
Our friends, it was a pleasure to have you with us along our course. Thank you for joining us. We wish you all the very best of success. Hope to see you once again in our upcoming activity. Stay safe and sound. Thank you, Engineer
Thanks, everyone.
Muhammad, for your dedication to share your experience. Also, special thanks to Engineer Diana and Dr. Sadouk and Engineer Muhammad. Thanks for joining us today. Engineer Mahmoud, thanks for joining us all today.
Thank you very much. It's a pleasure.
Goodbye.
Have a good day,
Thank
everyone.
you. Bye now. Thank you.